The side effects of Keynesianism, this economic policy which was developed on the basis of the theory of John Maynard Keynes, has side effects, had side effects. And one of the side effects is more and more money putting into the circulation, so this leads in tendency to more and more inflation. And another side effect is, where does the state get this additional money from, if not from the taxpayers only, by more and more state debit. The state becomes more and more debitor, it takes more and more credits. And for the credits, the state has to pay more and more interest. And so the state gets more and more into this trap of debts, of growing debts, and will lose its capacity to really make policy. So this is very short idea only in this direction, that the Keynesianism in the short run brought amazing effects, but on the long run it produced more and more side effects, and then it is understandable that there was a counter-revolution against Keynesianism, which originally was called monetarism, Milton Friedman in the United States, politically then Margaret Thatcher in Great Britain, and Ronald Reagan at the beginning of the 80s. Yeah, the monetarism, and this led more and more into what is called globalization. Globalization and neoliberalism. And they made the promise, if Keynesianism is put back and drawn back and reduced, and if the role of state is reduced, privatization of public functions more and more market economy elements should be re-established, then it will lead to a growing welfare or wealth, a growing wealth round the world. Without a welfare state, only by market economy. And now we see that this obviously is more than nearly 30 years now of this kind of policy and this kind of ideology. Not really solved the problems, but quite in contrast and in contrary, the problems escalated more and more. So, to come back to this graph here, the national product and also the worldwide social product cannot develop like this in the long run. It must lead into periods, at least a diminishing growing rate, or even recession, or even more. What is happening if the growth of national product, or international product we should or could say, can follow the path which the interest burden makes necessary? Then the interest burden takes a growing part of the whole product for those who get the interest income. And the rest of society has to share in a diminishing rest of social product. So from here, it tends to more and more economic and social crisis. For example, those companies and corporations which calculated on the basis of such prognosis, they now see what they get, the sales volume, what they get by selling their goods and services, is not as high as they expected. So it diminishes. I will show it on a very simple example. Out of the perspective of one single enterprise or company. These are the costs. Costs in English with C?
Yes.
C, this is also for consume, it's difficult. Here it means cost. The cost. Then the sales volume. Erlöse in German. Sales volume. Then this, if the sales volume is more than the costs, then this is a surplus, a profit, let's say. And there is some very important line. If the company manages to have the sales volume above the costs, then it is like a person who has the head over the water surface and is a good standing in the ground, and is glad and optimistic. But if now the average, the sales volume go down, then the situation changes. On average, let's say it goes down like this, then these are losses here. These are no profits. It goes into the negative. And we say here it is plus, and here below this line it is minus, or red figures in the books. Okay, what happens? This individual here comes down with the head below the surface of water, then bloop, bloop, bloop. And it doesn't take long time that it is finished. This is only a very simple picture to show the importance of this surplus. And if this is not possible to be realized for more and more companies, then they get into the red figures, they get into the loss, and the consequence in a market economy is usually. There seems to be some exceptions, as we all know, the banks which are too big to fail. They are saved by all these umbrellas. We call it in German Rettungsschirme. I do not know the English, like an umbrella to protect against the rain usually. Okay. This does not mean that every enterprise, every company or corporation is in this situation. Some, they will manage to hold the head above the surface, but the more it must hit others to drown, to be eliminated. Okay, so this means that this interest system, in this example, tends to economic crisis on the long run. And it takes some time that this effect becomes more and more relevant. I should propose a break at this moment, 10 minutes or so. A little more fresh air. Okay, let's continue. Nearly nobody is conscious about the fact that one is also involved in interest burden if one never has taken a credit. Why?